Hey everyone. Well, what can we say? There have been some very intense headlines for the last few weeks, today especially. So it's of course difficult to focus on or even care about the financial markets, but the financial markets will continue with or without us. So let's try to dive in because the market is also at a very intense period on its own. Let's start off with looking at my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages. On TradingView, it's called MMFI. I call it AT50 for above the 50-day moving average. What you could see here is you'd be wondering why I called this today an intense day, and you'll see why soon, because the market breadth actually held relatively flat. I mean, it was up 4.4%, but on an absolute basis, it's essentially flat. We are still oversold. We're on the fourth oversold day. And we're now at the point where the longer the market stays oversold, the more bearish it becomes. And no mistake about it, the market is bearish. And so that raises the stakes for the trading action and the oversold trading rules that I explain on my blog, drduru.com/122. Let's switch on over to Swing Trade Bot. As any of you long-term readers or viewers know, I have a subscription. So some of the things I show here, you may not have access to if you're only using the free version. The reason why I'm starting here is because this is such a dramatic moment. I want to do some high-level assessments first before I dive into particular indices or stocks. So let's click on the general market overview, which is which is available to people who don't have subscriptions. And you can see the red is just everywhere. I almost don't care that the NASDAQ 100 long-term is up when everything else around it is down, 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 down. And these red flags for trends are very important because we had some very bearish breakdowns in the market. And I'll show you what I mean in just a second. On the day, the split between advancers and decliners was actually not so bad. It's practically even. But you can see, of course, the number of new lows way outpace the new highs. So let me jump back to TradingView real quick first before I go into some scans, because I want to look at the indices. Now, unfortunately, TradingView changed the number of indicators that are available in the free version. So I'm only able to show, the way I have things set up, I can only show the 50-day moving average or the 200-day moving average. I'm going to be focusing on the 200-day moving average because that's the most dramatic thing that's happened in the market this week. So you'll see here on the S&P 500, the week started actually with a clean break of the 200-day moving average trend line. That was first bearish. The market tried to make a recovery, a nice little rebound right above that 200-day moving average, but then sellers took complete control of the market and just plunged the index down into what's essentially now a confirmed 200-day moving average breakdown. All the gains from the start of the summer of loving stocks are gone. They're history. All these fun times that I wrote about are basically just forget about them. Don't even consider this part of the market setup. You can see now, because of this breakdown, you look back and you see that this now looks like a rounded topping pattern in the market. Again, this is going to put additional pressure on trading oversold conditions. And again, I'm going to explain what that means in a few more minutes after I do some setup here. The only good thing I can see in the chart is that the S&P 500 is nowhere near the bear market line. But of course, if you are bearish, you're thinking, oh, okay, well, that means if I go short, I have all of this opportunity down here below. I am not bearish by rule because the market is oversold. I'm bullish, but of course, as a short-term bullish, and we'll see what happens whenever the inevitable, and yes, I do say inevitable, bounce occurs. Let's see what happens when buyers get back to this resistance. Now, it's the NASDAQ that's even more concerning than the S&P 500. And this is because the big news today for me is that the NASDAQ re-entered bear market territory. And just as a refresher, a bear market, the traditional definition of a bear market is when an index has lost 20% or more from its all-time high. And so I've kept this line here as a reference point because when the NASDAQ broke out above this line, it essentially heralded the beginning of the summer of loving stocks. And it was a great breakout, but it only brought in good times essentially for less than 2 months. So anyway, what you see here now is that, and actually I wrote about this, that the trading bots were all over this test of the bear market line and bought pretty much automatically, but they were stymied right here at this line that has been amazingly meaningful. This is the high of the NASDAQ before Jackson Hole of August 2022. And you can see in August, buyers stepped in right above that support line. Buyers held station right around there in this late September time period that set up this false oversold rebound in early October. And so now here we are. One last time, this line had meaning because the people who automatically bought on this test of the bear market line ran out of gas right at what was support turned into resistance. And this is a concept that you have to remember, is that these lines can have importance both to the upside as tests of support, but also on the downside as tests of resistance. And so far now, this line is holding as resistance. That's setting up the bearish market conditions because now the sellers have taken the NASDAQ back into bear market territory and as a bonus have broken through the 200-day moving average. The only somewhat positive thing I can say is that this close is well below the lower Bollinger Band. And again, remember this Bollinger Band describes volatility of price around the 20-day moving average. This line defines, essentially think of it as 2 standard deviations from the 20-day moving average. Think about it in terms of the vast majority of price action should happen within these Bollinger Bands. To the extent that price touches that or goes beyond it, it's an extreme move. So we have, yes, the sellers have plunged the NASDAQ back into bear market territory, but it's overextended and market breadth is oversold. So the odds favor a rebound, and we're going to see just how much power the buyers have pretty soon here. Because if they run out of gas right at the 200-day moving average, which is now converged with that bear market line and come back down, then boy, oh boy, we are truly in for a rough end to the year again, just like last year. So anyway, that's all the setup. Let's just, for completeness, look at 2 more indices. This is small caps. I tried to play small caps for a rebound for oversold conditions, completely failed. The sellers are all over the small caps. This is bearish for small caps because it's trading well below the pre-pandemic high. Let me just scan outward so you can just see how bad this has gotten. Essentially, we are now testing the lows from the bear market of last year, and it looks essentially like small caps are going to keep going lower. And so actually this longer view shows you how important this pre-pandemic high was. You can see buyers generally defended that for small caps for quite some time. So while small caps have essentially never left a bear market since it started last year, the sellers have now plunged small caps into even more bearish territory by getting a confirmation breakdown below this pre-pandemic high. All right. So I know I'm being long-winded, but just there's so much going on. I feel like I need to really take my time going through the action. And honestly, it's easier to talk through this than to write it all out. One last thing, let's take a look at the volatility index. as readers know, I have stopped paying attention to the volatility index because it is so useless now with people really focusing on buying options, what's called 0 and 1 day options, options that expire within 1 or 0 days. But now it's a little bit more meaningful because of the breakouts to new highs. The last breakout on a close basis was to a 7th-month high. What I like to do is when the market is oversold and the VIX is breaking out to new highs, is to treat that as an extreme oversold condition and just find some things to buy, no matter what the news headlines are. Obviously, that did not work so well this week. And in my blog, I'll explain some of the hedging moves that did work so well that convinced me that, yes, the market is in a very bearish mood. Now, notice here that while the VIX was up today, the volatility index was up today, it faded. And it fell back from this breakout point. So the more the VIX continues to fail at this line, the more I think this line is meaningful as the top in volatility. I'm not ready to call a top in volatility, just again, because of all these bear market conditions that have developed, but I am keeping an eye on this now because the VIX now seems to have some meaningful information. Now, I said 2 indicators. So let me just do one more thing, which is the triple Qs. And remember the NASDAQ 100 on the swing trade bot general market overview said that the trend was still up for the triple Qs. And part of that is because it has not yet cracked the 200-day moving average, this blue line. Now, I went ahead and bought a calendar call spread. I think I need to do a video just on why I choose that configuration for these kinds of moves. But I did it with the short side expiring next Friday and the long side expiring the Friday after that. And I chose, don't quote me on this, I think I chose 350 as the pivot point. But anyway, the point here is that I choose a point at which kind of protects me from volatility continuing to decrease so that the near-term short side of that calendar call spread will decay very fast relative to the long side. And so hopefully if the Qs do nothing but churn, I can still eke out a little bit of a profit. And if there is a rebound, I might still be able to get a good profit before the thing blasts through my pivot point. But anyway, I just wanted to show this because it's important to see there is one last holdout for the bearish 200-day moving average breakdowns. And trust me, if this also gives way again, then it's just yet more confirmation we are in a new bear market and we'll have to think and trade accordingly. Now let's go back to Swing Trade Bot. I'm on the home stretch now for this video, so hang in there with me. I want to do some scans because now that I know the 200-day moving average is more important than the 50-day moving average, I'm now switching my attention to those stocks that are showing some kind of life, some kind of strength at the 200-day moving average, whereas before, in previous oversold conditions, I was focused on the 50-day moving average because that was still the support that was holding up on the major indices. So I'm going to go to scans, end of day scans, and I'm going to look at two. First of all, let's see which stocks are still above the 200-day moving average. Oh, and that reminds me, sorry, there's one more index I need to show, which is the percentage of stocks trading above their 200-day moving averages, which I call AT200. And you can see here, I'm going to have to keep adjusting this line for a 52-week low, but this is very bearish for the long term. This indicator, the longer term market breadth, is now all the way back to levels it last saw in October. And if I peel this back further, you can see we're dangerously low. Now, of course, if you want to be bullish, like I'm trying to be bullish, then it means that there is not much more room to go here before we get to very juicy buying levels, even for you long-term investors who aren't trading, but looking for dips to buy and hold for months and years at a time. So we'll cover that again in another video if the market does indeed get that bad. All right, so back to Swing Trade Bot. Like I said, I'm looking for the 200-day moving average scans. Let's start with those few stocks that are strong enough to hold up to 200-day moving average support. And no surprise, there's only 30 of them. And again, as a reminder, there's two columns here. There's the filtered total, there's an unfiltered total by wave over the eye. You can see that there's some minimum volume and price conditions, and it excludes ETFs. As I always emphasize for these scans, you need to be as strict in your criteria as possible because you only have so much time and attention. So you want to limit your universe as much as practical. So there's 30 stocks here. Let's see those lucky few. And actually, you know what? I'm going to be even more strict. I don't even want to bother with stocks that are below $10. So let's go ahead and filter those out. I don't know how many that will end up with, probably still around the same amount. As you know, I like to view this as charts so I can get quick scans. As another reminder, I'm not interested in energy stocks, I'm not interested in financials, and I'm not interested in REITs for this kind of scan. And I've explained that in earlier videos. This has gone long enough, so I won't go through that some more. Now, the interesting thing about the charts here, the way they're set up, and Trader Mike, who runs this site, maybe he has some insight on, or maybe he can tell me whether there's some configuration to change this. But these charts only have two key indicators as well, the 50-day moving average and the 20-day. So while I did a scan on the 200-day moving average, you'll notice that the 200-day moving average doesn't actually show up. So I'm going to switch back and forth to TradingView to get a better look at what's going on. So this one's interesting right off the bat. Normally I would skip over the healthcare stocks, but because of the rage in weight loss drugs, the miracle weight loss drugs, a lot of device stocks, healthcare stocks have been plunging as if we found the cure for all disease and have found the magic drug to make people live as long as they want to live. And so I think there's a lot of value in some of these healthcare stocks, particularly medical devices, but you just have to be patient to let the current hype and hysteria run its course. So let's take a look at Steven. I'm just calling it Steven because it looks like that for the indicator. And sure enough, I like the look of this. It looks like, again, E down here for TradingView is earnings. Looks like earnings is coming up. So this is not something I'm going to buy now, but I do like the way that STVN held support here at this long-term average, and buyers stepped in again. Even though the stock sliced through that support, buyers did eventually come in to support that level. So that, that's positive. Now you can see that the upside might be limited because 3 times the stock has come to this level and failed. So your window of opportunity is probably around here. But anyway, I'm going to go ahead and add it because I want to keep an eye on it. So I clicked on watch list. I'm going to put in a note here as to remind myself why it's in my bullish swing list, 200-day moving average support. And hopefully I catch this. Oh, wow. Sorry. It's already in my watch list. This must have, I must have added it when it last touched support. Actually, I can't remember. That's embarrassing. But anyway, it's in the list. That's great. And I'm going to hopefully see what happens after earnings and see whether it's still a buy candidate. All right, let's keep this moving along. Warner Music Group is a stock I'm already in. I'm glad to see that it's sort of holding in, but I can't expect much upside. I've written about this stock on Seeking Alpha, and actually I'm due to write an update. F5, I don't quite like the look of what's going on here, but let's switch over to TradingView, get a clearer idea of what's going on. Yeah, it's post earnings. It's interesting for that standpoint. So if buyers can hold the 200-day moving average, actually, you know what? I just talked myself into adding this because it's post earnings. So we've got a big event out of the way and it's holding a key support level. Then that means this could be a buy whenever the market sentiment changes. So let me add this in here, 200-day moving average support, and add it to my bullish swing list. All right, that one wasn't already in there. Fantastic. All right, let's move along a little faster. BTU, that's energy, don't want that. Consumer cyclical, rubber and plastics. Advanced drainage systems. Actually, this should be a defensive stock if I'm understanding the name correctly. Let's take a look over here in TradingView. Oh, wow, that is beautiful. That's setting up for a beautiful test. I definitely want to add that. Now, earnings looks like it's probably going to come in early November. So again, this is a stock I will not buy here, even as tempting as it is. But I do hope to see what happens after earnings. So let's keep an eye on this one. That's a beautiful, beautiful setup that I would expect to be buying anytime now, if it weren't for earnings coming up and the huge risks, of course, that earnings bring when you're trying to trade on technicals. Okay, let's keep it moving. Industrials, aerospace. I'm just going to skip along because I don't like this big fade move here. Emerson Electric. Actually, this could also be a defensive. It's an industrial, so it could be. Let's just take a look, see what it looks like. Oops. Emerson. What was the symbol? EMR. Okay, no, it's actually kind of slipped below that line, so I'm going to skip over that one. And the differences here are I think the smoothing coefficient that I use in TradingView versus what's used in swing trade bots. So they're going to be these slight differences from time to time. They're minor, but in particular cases like that one, they matter. So I'll just keep it moving. I'm going to skip through a bunch of these. You can, of course, come to Swing Trade Bot and check out some of these if you're interested. Long-term care facilities, no. KBR, okay, this one was interesting. Again, anytime I see an industrial or something like engineering, I'm always intrigued to take a look. KBR, how do you look? How do you plead? Oh, look at that, another beautiful setup because it tested successfully support here and it's clinging on here. Unfortunately, it looks like earnings should be coming up anytime soon, so I'm not going to buy it at this point, but I definitely want to keep an eye on it. So let's add it, 200-day moving average support. All right, and let's keep it moving. Booking holdings, just because it's a consumer cyclical in the travel space, I don't want to buy it no matter how good the technicals look. But and as it turns out, it bounced nicely last week, but you can see it closed on the lows right at support. That I don't like the look of that. It would take some serious buying reaction tomorrow and in the coming days to really convince me that this is support that has any chance of holding. And of course, earnings are coming up, but I'm not adding this to the list anyway, again, because it's a cyclical in travel. Centene, this is actually testing the 50-day moving average pretty nicely. So let's take a look at what's happening on the 200-day. Is it a convergence? Actually, it's touching the 200-day. Yeah, there must be a convergence. Oh, let's do a quick switcheroo on. Actually, yeah, I don't need to switch to 50-day moving average view because I can see that here. So yeah, this actually looks pretty interesting, and it's post earnings. Unfortunately, it's sold off on earnings, but let's keep an eye on it and see whether sellers have already exhausted themselves from whatever they didn't like about earnings. So 200-day support, and I add it to my list. Okay, I'm glad there's still some space on there. I forgot to start this session by cleaning things out, so hopefully I don't run out of space in this video session. Let's keep it moving. Visa, healthcare, biotech. I also stay away from biotech because it's so speculative and news can come out of left field, out of nowhere to slam your position. Let's go next. Gilead, that's a long-term favorite of mine. I'm just going to skip over it for now because I think it's just churning. And LDOS, I do not know this company, so I'm just going to take a look at the chart just because. So let's see, what do you look like, LDOS? Okay, so 200-day moving average is actually on a downtrend, so I don't really like this one as much, even though it's more of a pivot point than support. So I'm going to skip over that one. Let's see, JP Morgan, that's financial. You can see a lot of what's happened since earnings have started is that even earnings that started off good, interpreted as good, have just attracted faders. And so this was earnings for JP Morgan. It gapped way over the upper Bollinger Band, as I explained earlier. That means it's extremely oversold, in this case, overbought. Sure enough, sellers faded it, and they pretty much have not stopped fading this stock until just today. And let me show you let me do a quick sidebar and an even more dramatic example. This is a stock that I bought a put spread on, and you can see here that on earnings, FedEx, and actually I talked about this in a previous video, but anyway, it popped up here, looked all good, but it stopped cold right here at the previous high. and sellers have just taken over ever since. It's suddenly like someone else has a much different set information from this earnings report, or the people who initially reacted missed something. Who knows? But this is why technicals can often be more powerful and more meaningful than trying to understand the fundamentals. The market is telling us something here, and FedEx has topped out. And if I go to UPS, their competitor, you can see that UPS through this entire period was selling off. And sure enough, during earnings, it fell another 6%. And actually, let's just see how low it's gotten. Look at this. I mean, UPS is now working off its the gains that it shot up soon after the pandemic started. That's pretty scary. And look at what's happened now to, wow, I'm glad I actually took this sidebar. Look in the war, look at what has happened here for UPS. This is an extended topping pattern that has unfolded in the matter of over 3 years. And of course, throughout these 3 years have been these very joyful periods where it looked like UPS was a bullish holding, but the overall longer term story is this thing is topping out. I'm glad I looked at this, because now I'm even more bearish on FedEx than I was before. Gosh, so many things I could do separate videos on. So that's something for you bears to take note of. And it's definitely a stain on the oversold period. All right, let's keep going. Hopefully that sidebar was useful for you all. I'm scanning my eyes really quickly. I'm not going to talk through all the stocks just because we've gone through for a long time. TSAT, this is an important lesson. I think I talked about this stock a while back, why I don't like these things that go straight up to the sky in a flash is because at some point, the sellers and the hype get exhausted and run out. And all that's left is people who want to book their profits. And you can see people have been booking their profits so much that we're actually filling in this gap here. And that is the end. So I know I went really long on that. I do want to do one more scan, which is now those stocks that have, this was stocks that were still strong coming into today and are holding 200-day moving average support. Now I want to look at those stocks that may have been weaker coming into today, but had a breakout. So let's see if there are any of those to take a look at. So again, end of day scans, all scans. And one of these days, I'm going to create a routine, what's called a routine in Swing Trade Bot, so I can go through this just a little bit faster. So here are the stocks that crossed above 200-day moving average. And of course, no surprise, there's only 29 of them. Let's filter to stocks that are above $10. So you get a little more limited. I'm going to speed read through this one. There's only a few, I think, that I want to really focus in on. For you, those of you who are interested in biotech, maybe you want to take a look at this one. Flextronics. This one was interesting because it's running into 50-day moving average resistance, but the bounce from the 200-day, the breakout, sorry, and the 200-day moving average looks so good. And it's very tempting here. If it can just dribble back to this support line, I think I might be a buyer. So I'm going to add this. Even though it's at 50-day moving average resistance, I think this could be interesting on a retest of the 200-day moving average support. Oops, sorry, that should have been 200-day moving average breakout. I'll fix that later. Okay, speed reading time. Okay, ITGR, oh, Royal Caribbeans, look at this one. Again, people were all happy about the turnaround here, and sellers have just been hammering down on the cruise lines ever since the peak in the summer. O'Reilly, Automotive, Assign, that's interesting. AOS, ICLR. Again, just because I'm speed reading through these doesn't mean that you shouldn't take a look at them if you so choose or so inclined or have some time. Granger, that's an industrial, that's nice. Oshkosh, which is truck manufacturing. This one actually looks, let's take a look at Oshkosh. OSK. I think I'm probably going to add this to the list. Yep. I think earnings were this morning, but let me add it to the list because it's something I definitely want to keep an eye out on for tomorrow. 200-day moving average breakout. All right. I still have space on the watch list. That's good. And that's also telling that I haven't found that many opportunities lately. Flow serve, I'm going to skip over. TMAS, train, especially in I think this is interesting, but I'm going to skip over just because this is a natural resistance point that's directly overhead. This is the breakdown line. So I'm just going to skip over that. Financial, simple. Now this looks good because it's not only breaking out above 200-day, but it's already confirmed a 50-day moving average breakout. And it's a consumer defensive. So that's good in these bearish times. Sure enough, it's eked over. But if I scan back, it looks like a stock that really just is churning over the longer haul. So not so interested in trading that. If I were to look closer and it say maybe had a 4 or 5% dividend, it might be worthwhile to put in a long-term holding. But this is videos about swing trading and short-term setups. Fix in another industrial. Let's take a look at that. And yes, look at that. It's barely holding on, but also it reported earnings. Man, it's careened hard into this support line. So whatever happens in earnings, I think this probably is going to be a breakdown. Oh, this is a tough one. You know what? I'm going to go ahead and add it only because I want to see what happens after earnings. So let's say 200-day moving average breakout. But I really doubt I'll be trading this one. But I'm just curious. All right, financial services, Celanese, Cinemark. This is a tough one because it's a movie theater, but this probably looks like a good setup for a decent bounce, but I'll skip over that. Technology, electronic components. I don't like this low volume, so I'm going to skip over that. Next time I'll put a volume filter on as well. Toll Brothers, home builders. Oh, that's a whole nother story. That's a story for another day. I'm going to skip that for now. SAIC, this was interesting. In an earlier video over the summer, it hit a scan on during an oversold period. It tested the 50-day moving average successfully. The buying opportunity didn't last that long, but it was somewhat decent. But then once it sliced through here, I took it off the map. And you can see the false breakout over the 50-day moving average that happened here. So I don't like this record that's unfolding for this stock. So I'm happy just skipping through it. This is another stock that's in the housing area. Again, a whole different story. Actually, I'm just curious to see what it's looking like, even though I'm not going to add it to my list. Yeah, look at that. It's clinging to 200-day moving average support. The breakout today was just marginal. If housing starts to look good for some reason, this is a stock that I might come back to, but I'm not going to bother putting on the list. And that's the last one. This is financial. So as in review, let's go back to the general market overview. I can't say this enough. This market is bearish. Tech stocks are back in a bear market. Small caps have been in a bear market. And when 2 out of the 3 are looking sickly, it's only a matter of time before the S&P 500 also joins them. It's not a hard, fast rule, but it is definitely a red flag warning that should not be ignored. So I say all that because when I write about and talk about trading oversold period, my upside expectations have to stay very muted because of these bearish conditions. I'll also say that the difference in the oversold trading period is I have to start expecting oversold periods to last longer than a day or two, which is the average, the typical average. And that means I have to trade a little less aggressively than I typically like to. So for instance, I have a rule that says, well, if you want to trade the oversold period conservatively, then you wait until the oversold period is over before you buy anything. That allows a more conservative swing trader to have an immediate stop point, which is sell your short-term trades if the market drops back into oversold, and hold on for dear life as long as it stays above the oversold period. All right, I'll end things there. Hopefully that was helpful. I will do my typical blog post over the weekend to write about the latest developments and how I'm trading and interpreting the oversold period. In the meantime, Be careful out there. Take care. And I totally sympathize with those of you who are weighed down by all the negative headlines and the human tragedy and misery that just is engulfing us right now. I know it's no small comfort, but there is a lot of problems, of course, all over the place. It's just now when things get extreme that they come into the foreground to our attention. But always remember, we have to figure out a way of moving on, keeping not moving on, but keeping moving, keeping progress, keeping moving forward. And one of those ways is to not forget your discipline, not forget your routines. All right. Again, I hope that's helpful. Give me some comments uh, sorry, provide some comments. If you have any feedback or subscribe to this channel, go to my blog, drdrew.com/122. Subscribe to that so you can get timely updates on what I write about. All right. Thanks for watching. If you made it this far, you're definitely hardcore. And in fact, well, one of these days I'm going to do a contest and award a prize to anyone who actually emails me or it'll have to be an emails me the magic word at the very end. I'm just very curious to see what kinds of folks actually make it to the very end. Of course, the analytics on YouTube will tell me the percentage of people who make it to the end. It's always pretty low. But I'm just curious about who are those folks who actually make it this far, who actually find this stuff so interesting and helpful. So anyway, thanks for hanging in there, folks. And until the next time, talk to you then. Bye-bye.